Welcome to the Real Estate Marketing Podcast. My name is Jerome Lewis. I'm your host for today. Real Estate Marketing Podcast is a podcast where we talk marketing, tech, business, and leadership. We talk these things for real estate agents, real estate investors, and real estate entrepreneurs. Real Estate Marketing Podcast is a podcast that has two purposes. Purpose number one, to educate and inform our audience and listeners. Purpose number two, Adam, to spotlight you, your business, your service, or your product in a way that provides value to you, including market exposure and content creation. With that, we have a very special guest, Adam Gower. Adam is a 30-plus year real estate veteran with over 1.5 billion of creative real estate investment and finance experience, who today builds digital marketing systems for real estate professionals who want to raise equity capital online, aka crowdfunding. And he has taught over 4,500 individuals how to build wealth, preserve capital, and earn passive income from investing in real estate. He has over $7 billion of experience transacting distressed real estate for major institutions and banks. Find out more at Gower Crowd or run a simple Google search for Adam Gower Crowdfunding to learn more. Adam, welcome to the show. I'm glad you're here.
Hey, it's really nice to meet you, Jerome. Thanks for having me.
Likewise. So I'm excited today, and we're reading your bio. Can you tell us, take us on a journey, tell us in your own words how you got into real estate?
I sure can. Yes. So I actually started a very long time ago. And the way that I actually started was I was living in Southern California, and I used to knock on doors. Jerome, seriously, I knocked on doors. This is a very long time ago, by the way. I would knock on doors and tell people I will do anything at all for $5 an hour. That's what I used to say. And what I learned, interestingly, was that people, if all I said was, I'll do anything for $5 an hour, they'd say, no, go away. But if I said, and I used to walk in the neighborhood where I lived. So if I said, hi, I'm Adam, and I live in that house over there, they'd always have a look to see which house it was. Yeah, I live over there. And I said, I'll do anything for $5 an hour, for example. And then I'd list off a bunch of examples, like I'll weed your yard, I'll paint your house, I'll do this, I'll clean your house. If I gave them a list of things that I was willing to do, there's always something that they suddenly thought, oh yeah, I could really use that. And so that's how I actually increased my conversion rate to get clients. And one of them was an electrician, and he asked me if I was willing to do electrical work. So I said yes. So that's actually how I got started in real estate. He had me crawling around in basements and attic spaces, pulling wires for him. So that's a very long time. It was the early 1980s. But fairly quickly after that, I hooked up with a ground up multifamily developer, and I started raising capital for them. They wanted to raise money from Japan, actually, in those days. So I raised about $30 million in 1980 dollars. So today, 30 million isn't that much, but in the 1980s, that was a huge amount of money. And then the short story, Jerome, I'll just try and keep it short. I ended up in Japan after the savings and loan crisis of the early 90s. And I headed up a division of Universal Studios in charge of all their real estate development in Asia Pacific. I came back, I started doing my own developments. And in 2007, right before the global financial crisis, I sold out everything and was hired into a bank that had a lot of distressed, non-performing loans secured by real estate or collateralized by real estate. And so I went in and I helped them clean their balance sheet, ended up over at Colony Capital working on a $7 billion portfolio. And once all of that was over, I started doing what's called seed and angel investing. So that was around 2012. And that's where I learned the language of digital marketing. So when the Jobs Act was passed in 2012, and it became legal for sponsors to raise capital online, that's what I started to do. I built systems. I watched to see what companies were leaders in the field, who was trying to raise money online, how they were doing it, how they were doing it successfully. I picked best of class practices, and we started providing the same services to clients. Now, today, our clients manage probably over 35 billion of assets under management. They've probably raised $1 billion or more in capital since they started using our systems. So that's what we do today, is we build digital marketing systems to help sponsors raise capital online.
That is fascinating because I enjoy both aspects of the digital marketing as well as the real estate. So I would like to hear from you, like why there's a myth that people aren't paying attention online and they're not paying attention in the digital space. So I would like to hear you shed some light on that because you're doing very well with digital marketing and raising capital. So could you talk about that a little bit?
Well, look, you've got to think about it in terms of numbers, right? It's
Mhm.
just, it's a numbers game. There are hundreds of millions of people online. There are maybe 12 to 13 million or so accredited investors. Most of our clients, they want to attract accredited investors, mostly for regulatory reasons. They have to attract accredited investors. So there's 13 million. Well, just think about it this way, Jerome. In order to be super successful, like really big scale successful, if you have 400 or 500 active investors with you, you can raise tens of millions of dollars. So out of that 12 million people, you only need 400. So it doesn't really matter if, let me get this right, 11 million 900 and however many thousand people pay no attention to you at all. They could all completely ignore you. It doesn't matter. You only need 400 to be super successful. So yeah, you're right. There's plenty of people that don't pay attention, but those people aren't going to invest with you. The ones that do pay attention are the ones that are going to invest with you, and those are the ones you want to be focusing on.
Thank you. Thank you for sharing that. So for someone that's like looking to get involved in like, what it is that you do, how would they go about that? Like, are there some books, websites, like what things should they do to get involved with your company and what it is that you do?
All right, sure. So the website that I have is called gowercrowd.com. That's GOWERCROWD, gowercrowd.com. And at the bottom of the homepage, there are, I've written, I don't know, I've kind of lost count. I think it's kind of 7 books or something. But at the bottom of the homepage, there are 3 books. And the one that I would recommend, if you are out there trying to raise capital, you want to raise capital, the one that I recommend you look at is called Syndicate. In fact, it's on the website, it's a digital version, but yeah, I can't even see my own face. There we go. So it's called Syndicate. It's a digital version. You can download it immediately from the website. Actually, it's a $7 book. So there is a very small cost. If you don't like it, just let me know. I'll give you $7 back. It's not like I want to stick you for $7. So that's the best way to go. And then, so I buy one of those. There's 3 books on the website. I forgot which ones actually. I change them around occasionally, but that's one. Actually, let me just double check. Let me have a quick look and see which ones they are. So one of them, Syndicate, and that's really for people who are raising money for their real estate projects. And then there is another one called Real Estate Crowdfunding, the secret world of real estate and crowdfunding, which talks about the benefits of raising capital online or investing in real estate online. That's specifically for passive investors. And then there's a new book also for investors that I just wrote and published called Reality, the reality of distressed real estate. That's a whole different topic, but they're all very high value. There's a lot of information based on my 35 years of experience in the industry in those books.
Thank you. Thank you for sharing that. One of the things that I like to do is I typically like to get this is like a selfish thing by me. I like to get a signed copy of the books from my guests. How could I do that
Well,
Happy to
just
pay for
I'll tell you what,
shipping.
just send me an email afterwards,
Okay.
and
Okay.
yeah, I'll send you something.
All right, perfect. Thank you. Because I'm big on books. I've written a few books myself, and I understand the value of them. I just like to get them from my guests. I get some high powered guests that come through. All right. So with that, could you tell us about one of your like favorite case studies across any of those books that you just mentioned, or any of those strategies? Tell us about like one of your favorite case studies.
All right, so I'll tell you what. Let's talk about today.
Okay.
And what you absolutely should be doing today, if you are a real estate sponsor, if you are raising capital or you're doing deals, and you want to raise capital today, or you've already raised capital for investing in real estate, you've got a bunch of investors. The single most important thing that, and by the way, let's date stamp this podcast. So we're in August of 2023. So today, and you may be listening to this years from now, I don't know, but this is August 23, and so we're in the very midst of the beginnings, actually, of a very significant, serious commercial real estate downturn driven by increasing interest rates. And what that's done is it's created a lot of stress for sponsors who are borrowing at sub 3% rates, now finding that their adjustable mortgage rates on commercial properties have over doubled. So it's becoming very, very challenging environment for people who are already active in the market. The number one most important thing that you could be doing right now is communicating. You absolutely positively have to be communicating with your audience and with your investors. And that doesn't mean sending them holiday pictures, right? That means that what you've got to be doing is explaining what you're seeing in the market, how it's impacting your investments, how it's impacting the way you find deals, how it's impacting the current deals that you're already in, and explaining how you are navigating the new economic environment. It is absolutely critical. The worst thing that you could be doing today is sitting silent and not communicating proactively with investors. Why? Because if you do that, they are just going to worry that the worst has happened, that you've lost money, that you've fled the country. Who knows what they're going to think about. So that is the number one most important takeaway from today's call. If you're out there and you have investors and you're listening to this show and it's August 20th, actually it's any time, but particularly during a downturn, you need to be actively, regularly communicating what's going on, how you see the world, and how you're dealing with it with your investors.
And you do digital marketing. So is there like a preferred way of communication? Will it vary? Like, what is your recommendation for people to communicate with their investors, their clients, and their prospects?
Okay, so obviously the dominant for existing network is email. You want to be sending out emails at absolute minimum at least once a month. We did a multi-sponsor investor sentiment survey recently, and investors we interviewed. Well, it was a survey, but we sent it out to, I don't know, 40,000 investors, and the investors want you to be communicating with them, ideally by email, no less than once a month. So that email is the best thing. However, there are all kinds of ways that you can communicate by email. You can send an email. The other thing that we've found investors like is if you sit in front of a Zoom screen and just explain what's going on, right? Record yourself explaining what's going on, or get a partner together with you. You can talk, one of your business partners, you can talk about what's going on and how you're dealing with it, and send a link to that video. That's good as well. Or you can just put bullet points in an email. But email is the dominant or predominant form of communication, even if your email is redirecting your prospects and investors and etc. to a page on your website or to a video. You want to be sending out emails. Now, there is another aspect, Jerome, and that is that your communications, you've got to be very careful that you're not tone deaf. And what that means is that if you're sending out, if you're posting online on social media or sending out emails, and that you're just talking about the good times, or the tone of your emails is referencing the good times, you're just tone deaf to what's going on in the world. I mean, the world is the commercial real estate world is in turmoil at the moment. So you want to be dialed into what's going on, make sure that you understand the concerns of your investors. Now, there's another thing that you can do. Depending on how many people you have in your list, this is a good way of communicating. You could write and send out a survey. You do it once a year, and put some questions into your survey. You can use SurveyMonkey, or you can use Google Docs. There's all kinds of ways that you can do it. And you send out a survey, and you ask your network what they are seeing in the market. Ask them some key questions that are not just interesting, but that you can act on. In other words, that the answers, if you send out questions, that the answers to those questions are actionable. So, for example, like we did in this exact example I just gave you, in the survey that we just did recently to investors, we asked our investors, how often do you want to see, or do you want to hear from people you've invested in? And the answer to that question you can act on, right? If they tell you once a month, now you need to be communicating once a month. Don't ask open-ended questions that have no actionable result, right? Ask questions that you can actually answer. And the nice thing about doing a survey is that your respondents to that survey, they become vested, a little bit more vested in what it is that you're doing, because they're participating in what you're doing. So that's a good tactic for communication. You can't do it very often, but you can do it once in a while. One more thing that you can do. You can also ask your prospects to do, or your network to do, a favor. You put a line, your subject like this, I have a small favor to ask. And then you can ask them to do something, like it might be comment on this post on LinkedIn, or subscribe to my YouTube channel, or leave me, in your case, it might be leave me a review on Apple, right? On Apple Podcasts, for example. People like to, prospects, doesn't matter what state of the economy we're in, that people like to be engaged. And if you ask them a favor, they're happy to do it. And those people become more engaged with you. It's a good way to communicate.
Thank you for sharing that. So one of the things that, and myself too, one of the things that we get caught up in as like entrepreneurs is doing like a lot of the business. And it seemed like you've transitioned into like controlling and influencing a lot of it. So could you share with us, and I'm asking this for myself as well, like how we can make that transition from doing so much and getting more people involved and leveraging ourselves properly?
Jerome, don't quite understand your question. Do you mind rephrasing?
Yeah, not a problem. So when we start off as entrepreneurs, we go and we're doing a lot of the business. That mean like I'm running, like instead of being like purely an investor, I'm doing a lot of the business, right? I'm a real estate business owner more than I am a real estate investor. And some people just want to be real estate investors, but somehow they got themselves into being a real estate business owner. So can you shed some insight on how that was for you?
You mean okay, I still don't quite understand your question.
It's okay.
So I'm going to try and answer it. So look, the decision that I made was that I decided, so I still do real estate investing, but I typically do it passively these days.
Right.
We have, some of our clients are some of the top sponsors in the country. And I get to know them exceptionally well. So I invest with them passively. But I made the conscious decision that what I wanted to do was, instead of going out and actively investing in real estate, and the reason that I made this decision, by the way, was because I've been through multiple downturns and I've seen how people can fail. And it kind of made me gun shy, to be quite honest with you. Hello?
Yes.
My screen and everything just died. I've totally lost you. I don't know where you are. Can you see me? There we go.
Yes, I see you.
My screen's all just kind of black.
And just so you know, that was my question. How do you go from active to passive? Like, what was your perspective and why? So is that clearer?
Okay,
Yeah.
got it. All right. So so the answer to that is, gosh, it is enormously time consuming. I mean, in order to be an active investor, to be a professional real estate investor, somebody does that all the time. It's a job. It's a full-time, dedicated profession. And to do it well, you have to be absolutely hyper-focused. You cannot escape the small details. You need to understand absolutely everything that's going on. It is a full-time career. Plus, you need to have, in my view, you need to have really, really good professionals around you, either employees or partners or contractors. Right? It doesn't matter if you're a sponsor, you got to have, good general contract, maybe a good general contractor, subcontractors, but then you also need professional contractors like attorneys and accountants and etc. So it's a business. You're running a business really as an active investor. Plus, there's also there's also a lot of risk that you got to deal with that can be very, very stressful. You have construction entitlement, depending on what you're doing. Entitlement risk, construction risk, market risk, all kinds of risks. So I just preferred I like to think of it, Jerome, as, you think of the gold miners, right? The 49ers, right? The gold miners. So there were those that made huge fortunes. And then there were those that the vast majority didn't. They just scraped by. But the ones that consistently made money were those who made the shovels, right? So that's what I like to think of. I make the shovels. I provide the tools to all those who are out there raising capital online. We really help them. We're exceptionally good at it. Our clients have raised over $1 billion probably in equity. And I just prefer that. The other thing is actually, I really like helping people. It's something that I think, what would I do if I was to retire? I'd probably do much the same as I do now, only it maybe not be helping people raise money, but whatever it is, it would be helping people, educating, helping people do things that they couldn't otherwise do. So that's why I shifted in part. However, I will say that I'm super active at the moment, looking for deals, looking for distressed deals, and trying to get back because the market, look, the time that I've made money in the past has been during a downturn. And we are in one now. Like I said earlier, we're in the very beginnings of one, and it's almost certain to be significantly deeper over the next few months. So I'm actively looking for deals to actively invest in.
Thank you for sharing that. I am hearing like what you're saying in the different markets. Some people are like, yeah, there's a downturn and things are coming. What should people be doing to equip themselves to like brace for this downturn? Like, what should they be doing? Should they be educating themselves? One, you said was communication, but what are some other things they should be doing so they can, I don't know, best prepare for this downturn or escape it?
Well, you're not going to escape it, but what you can do is to prepare for it. And one way to do that is exactly what you said, is to educate yourself. That's why I wrote Reality, the Reality of Distressed Real Estate. This book based on my experiences of downturns before. So you do want to be studying and understanding. Then the other thing that I would say, Jerome, is don't be in a hurry. You've got to be patient during this market. If you're a passive investor, don't be in a hurry to make an investment. The market is undoubtedly going to continue struggling. It's going to continue to go down. There's going to be a lot of distress on the market. Again, this is August 2023. You're going to see a lot more, certainly office, but you're going to start seeing other asset classes, including multifamily, are going to go into distress. So you want to keep your eyes and ears open for, again, if you're a passive investor, for sponsors who have identified distressed deals and are able to articulate exactly the business plan that they're going to implement. I will tell you this, that distressed deal investing is and can be incredibly complicated and very, very high risk unless you know what you're doing. And I've personally handled, I don't know, billions of dollars of distressed deals in my career. It's hazardous environment. So you really need to be sure that you're working with somebody who has certainly been through it before, knows what they're doing, and can demonstrate an ability to execute on a distressed deal business plan. So education is the number one thing, I think.
Okay. And from your perspective, your professional opinion, what's the main contributing factor, whether it's 1, 2, 3, of the current downturn in the
Interest
market?
rates, period. That's it. Just
Okay.
interest rates have gone up. And then you've got a lot of sponsors who have not been through downturns, who underwrote too aggressively, their deals too aggressively, had no margin for error in their underwriting. They assumed rents would go up too quickly. They didn't make any accommodations for interest rate increases, and that's not. That's almost a blameless error, because nobody could have predicted that interest rates would go up as fast as they have done. But you always want to be underwriting under the assumption that there will be some kind of decline in the market. So ideally, what you want to be doing is underwriting 3 different scenarios. You want to be underwriting best case, worst case, and most likely scenario. And sponsors that do that are those that will prevail, assuming that if they underwrote a worst case scenario, that they went in, they built a business plan that would allow them to survive a worst case scenario.
Thank you. And Adam, I want to get us wrapped up. Who should be coming and seeking you for your expertise? Like, who's the ideal person that should be coming? Like, Adam, I'm ready for help. I don't want to lose out, right? Or I want to best prepare myself so I don't, lose everything. Who should that person be? Should it be an experienced person, a new person, someone with a deal, someone with not with a deal? Like, who should be coming to you that could use your help and your expertise?
Yeah, so there are 2 groups of people that we educate. The primary group are those people who want to raise capital online. So if you're a sponsor, you're a seasoned sponsor, you've got some experience and a decent portfolio, and you want to raise more money for distressed deals or for long-term growth, we are the number 1 shop in the country. We can help you raise as much money as you want. If you're a passive investor, we also provide extensive educational materials for passive investors to understand how to invest, what to look for. I think it says on my bio 4,500. We're almost at 5,000 actually. It kind of keeps ticking up every day. But we provide some deep insights, some highly valuable educational materials for passive investors. So you're never going to avoid risk altogether, but to mitigate risk to the maximum, while of course maximizing the upside. So minimizing risk while maximizing the upside is how we teach passive investors.
Thank you. Thank you for sharing that. So I have a question that I normally ask, but I'm going to switch it around, right? I normally ask our guests for 3 books, and then I tell them to tell us why they recommend those 3 books. But you've authored 3 books. So I would like to tell you, I would like for you to tell us about each of those books and tell us why that book is relevant to the particular audience. Is that okay?
Thank you. Yeah, absolutely thrilled to. In fact, let me just pull them up so I can make sure. So these 3 are on the gowercrowd.com website. They're at the bottom of the homepage. One is called Real Estate Crowdfunding. And it is subtitle is The Secret World of Real Estate and Crowdfunding. And crowdfunding is an absolutely it's not, it's actually about 10 years old, but essentially it's a new form of raising capital, but it's also a new way to invest in commercial real estate. So that's a really excellent book if you're interested in understanding what is real estate crowdfunding. What is it exactly? And that applies mostly for investors, but it's also of use to people who are raising capital. The other book that is geared primarily to investors, passive investors, is Reality. The book is called Reality, The Reality of Distressed Real Estate. Now, this one I just wrote, and this one is an overview of what makes real estate distressed. By the way, all of my books are advanced. They're not 101 level. I started at 101 level, but then I dive deep. And so Reality, which looks at the reality of distressed real estate, really discusses or exposes the complexity of what distressed real estate is. And I also provide access to discounted distressed real estate investments. So that's a good book if you want to get involved as a passive investor in discounted distressed real estate. That book is called Reality, the Reality of Distressed Real Estate. And then the third one is for sponsors, people who are raising capital online, professional real estate investors who want to find more passive investors to have them invest with them. That's a book called Syndicate, a brand new way to finance real estate. And that's actually very powerful. So we've built dozens, or I don't know how many, a lot of websites. As I said, our clients have raised huge amounts of money. And we know exactly how a website should be structured. What do you need to have on your website in order to be able to attract, nurture, and convert prospects into investing with you? That is the book Syndicate. It's all there at gowercrowd.com.
Thank you. So this is final question is, what's one question you wish I had asked you, and how would you have answered?
Oh, goodness me. What would I like you to have asked me? Well, I don't know, but I know what I'd like to ask you, and that is, what are the lottery winning lottery numbers for this week? No, I don't know. I think, yeah, that's an interesting question. I think your questions have been very interesting and stimulating, and I really appreciate all the questions that you've asked. Yeah, you've asked me everything that I would like to answer. Thanks, Jerome.
Thank you. How can listeners find out more about you online?
All right. So the best way to do that is to go to gowercrowd.com. In fact, that would be the question I would ask you to ask. How can they get in touch with me? Thank you. So I'd say go to gowercrowd.com. If you're not interested in buying one of these books, that, like I said, they're only $7. And if you don't like them, I'll give you your money back. Just let me know. I also have a newsletter. It goes out every Wednesday. We have a list of all the latest news headlines, commentary, all about commercial real estate investing, finance, syndication, and crowdfunding. It's totally free, and you can subscribe on the website. So just subscribe. So there's a big red button. I think it says subscribe somewhere on the homepage. On every page, actually, I subscribe. Go ahead and subscribe to the newsletter. You can always unsubscribe, and you'll start getting emails from me. I don't overdo it. It's every Wednesday. It's very predictable. And you can always unsubscribe, of course. But once you get one of those, if you want to communicate, just hit reply, and I'll get back to you.
Adam, this has been a pleasure. If you could close us out with one word, no explanation, what word would that be?
Patience.
Patience.
Yeah.
All right. Adam, this has been a pleasure. I appreciate you so much. Thank you for your time here today. I'm going to close this down.
Jerome, a real pleasure. Thanks for having me.
Thank you. Thank you so much.